Where does money come from? Not the mint, not the printing press. More than 90% of the money you'll ever touch was created by a keystroke in a commercial bank. Here's the myth we were all taught. Banks collect deposits from savers, then lend that money out. Sensible, intuitive, wrong. It's actually closer to the reverse. When a bank approves your loan, it doesn't hand you someone else's savings. It types a number into your account. That deposit did not exist 1 second earlier. The loan creates the deposit, new money, born as debt, added to the economy's money supply. Walk through it. You borrow 20 lakh for a flat? The bank marks an asset, your promise to repay, and types 20 lakh into your account as a deposit. Nobody's balance went down. The money supply just grew by 20 lakh. And when you repay the loan, the reverse happens. The deposit is extinguished. Money isn't just created by lending, it's destroyed by repayment. The money supply breathes. So why don't banks create infinite money? 3 breaks. First, every borrower must be worth the risk. A bad loan is the bank's loss. Second, banks need capital, their own funds, against every loan they write. And third, the central bank sets the price of the whole game, reserve requirements and the interest rate that makes borrowing attractive or brutal. The RBI doesn't print most of India's money. It sets the conditions under which banks dare to. And there are really 2 kinds of money wearing one name: central bank money, the notes in your pocket and reserves that banks hold with the RBI, and commercial bank money, the deposits banks created, which is most of what's in your account. Your bank balance isn't rupees in a vault. It's the bank's promise to pay you rupees, a promise you spend as if it were the thing itself, which is why trust is the entire system. A bank run is simply everyone testing the promise at once, and no bank, however healthy, can keep it to everyone on the same day. That's why deposit insurance exists, why the RBI stands behind the system as lender of last resort. The architecture assumes the promise is never fully tested. So what actually backs the rupee? Not gold. That link died decades ago. The honest answer: the RBI's balance sheet, the government's power to tax, and everyone's agreement to keep accepting it. Money is a shared story, disciplined by institutions, and once you see money this way, the big machinery snaps into focus. Too much lending, too fast. That's inflation's engine room. Lending collapsing. That's how depressions happen. Money literally vanishing as old loans die and no new ones replace them. The economy's money supply isn't a fixed pile. It's a flow, breathing in and out through a million loan decisions. So, where does money come from? From a promise meeting a keystroke, inside a system built on trust. You are not spending pieces of gold. You are spending belief, with excellent bookkeeping. If this made you see the world a little differently, there's more where that came from.